Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the euro currency. Also take the brief look on the British pound, but first on the euro. So you can see our retracement is played out. So it has shown just minor pullbacks at the levels where we specified for a long position entry. The first one here was confluence. Here was relatively healthy pullback, some kind of the ABCD pattern. So we discussed this. It's the right arm on the insurers and said that it's probably the first chance to go long. Unfortunately, it has led just to the pullback, not has become the upward continuation. Next time we said that we need to keep an eye on the completion of this ABCD pattern right at the major support. That has happened here. That's again, this was the pattern, but take a look. Well, we could place the stop, the break-even stop here, but it was very small impact on the market. It's just no reaction on the OP. Pay attention, guys, that this is not just OP. This is agreement, and agreement near the daily oversold area. So take a look where we stand right now, actually. So market coming to the daily oversold. So overall reaction currently it seems logical, because yesterday we said that, guys, keep an eye on the data in the United States, because investors just get started to receive first signs of the pandemic impact on the economy. This is the first data that already includes the impact. And this data is awful, guys. So if you know the numbers we got on the initial claims, yesterday this was the 2 times greater than market expects. It was 6 million demand for the in claims. So people losing the job. And last week it was 3 million. This week is 6 million. So it's moving average. Will very soon become the 3 million per week. So it's just all awful data. That's why, guys, today I suggest that we will get the drop not just for the 300,000 in the payrolls. I think that it should be 1.5 times greater at least. It's my suggestion. So we will get the much worse payrolls data, and on the background of this data, investors, people start to understand that we're coming in a global recession. The recession that will be really strong, and that is greater than the previous recessions that we saw. Besides, on the previous recessions, in general economy was functioning. This was different recession, like liquidity, the collapse of the subprime bubble in the United States. It was different type of crisis. Currently, it's global crisis indeed, and the data that we start to get, well, it just explains people that nothing is over yet and everything is just started. Well, and on the background of this information, investors return back and starting running again in the United States, dollar and safe haven assets. That is some irrational or tricky moment of our world. So when the situation become worse, and especially in the United States, the people run in the United States assets. So that's just how financial system works, because it's safe haven assets and people run into them. So that's what we see right now. Based on this information and in the recent data that we've got currently, and even based on the technical reaction that we see, guys, it's obvious that no upward continuation will happen in the nearest time. Because if we get this information from the United States, what we will get from the Europe? What will be with the European economy? The same as we could ask about the Great Britain. So it means that this is not a retracement anymore, and very probable that market will return right back down to the previous lows. So it means that first target that we will keep an eye on is XOP. It's 106.85. It could be reached today on the background of non-farm payrolls release, because you can see no reaction in agreement in daily oversold. Potentially, we could expect drop right back down to the 10630 area. That is two short-term targets that we have. So it seems that this one is not action to this level, as we suggested initially before data release, but this one is just minor pullback before downward continuation. So currently, taking into consideration new inputs that we have from the fundamental point of view, because we have the new data right now, and taking 2+2 with the technical behavior of the markets on the intraday charts, we suggest that this particular situation with the downward continuation here. So that being said, here on euro currency, it's not much to do because we're at the overbought. Hardly you will take the short right here. But you could consider taking the short on the Great British pound. So take a look what's going on here. If you remember last time we discussed the possible power fly here, completion of the XLP, but market has failed to do this and start diving right now to the downside. So it's following the major tendency. So it means that as we still stand close to this area of strong resistance, you still could try to go short, but the stops anyway should be above this area. Well, because you can see that cable stands a bit behind the euro currency, so euro starts dropping much faster and earlier, while cable stands a bit behind it. That's what we have in the shorter term. In the longer term, guys, now it's really the question whether monthly grabber on the euro will survive. So if April will drop below the lows of the March, we could get failure of the grabber, and that will be quite different tune. So that's what we have right now on euro currency.